Good morning, friends. Today we are going to discuss about the accounting. Let us try to understand accounting and introduce to all of you. Accounting is the language of business. It is a standard set of rules and regulations which measures financial performance. Accounting is regulated, required, because all of us needs to know whether the business which we are doing is profitable or loss making. That is why we need to understand and translate all the business transactions in terms of the accounting. So accounting assesses a company's financial performance in terms of the profit and loss account, balance sheet, and the cash flow and fund flow statements. Let us try to understand objectives of accounting. The most important objective of accounting is to maintain up-to-date records, because if you can maintain the records, then you can conclude and work out a suitable profit and loss account and balance sheet. So accounting ascertains the results of the operations. It ascertains financial position as the particular accounting year end. It gives you the statement of assets and liabilities and profitability. It also portrays the liquidity position. It talks about cash position on day-to-day basis, how the cash has come in and how the cash has gone out. The accounting protects business properties such as fixed assets, land, building, machinery, how the money is invested in the business and how it is utilized for proper conduct of the business. Accounting facilitates important decision making because the management is always interested to know how the money is utilized for the purpose of the business. So accounting satisfies the requirements of various laws such as Income Tax, Companies Act, SEBI guidelines, or stock exchange guidelines. That is why accounting is very important. It is important for corporate decisions. It is important for investment decisions also. Let us understand what are the functions of accounting. These are the basic functions which we should always keep in mind. The first function is recording the financial functions and keeping yourself up to date as to day-to-day transactions. It is a managerial function because management is interested to know what is the status of accounting. The legal requirements also make us work on accounting because you need to have up-to-date records for supporting legal requirements. Accounting understands language of business. It translates all these financial transactions, all the accounting transactions in terms of language which you can understand. Let us see what are the advantages of accounting. It helps to have complete record of business transactions. It provides useful information from making various economic decisions. It facilitates comparative study of current year with last year, with company A with company B, so that you can compare the performance of various companies and conclude what could be the business efficiency. It provides various factual data and you can interpret the information about the various transactions. Accounting helps in complying with certain legal requirements which are statutory. However, friends, even though we talk about accounting is very advantageous, there are some limitations. Of course, limitations should not be taken in negative spirit. We have to understand how we can overcome these limitations. Accounting is historical in nature. What do you understand by historical? Historical means, suppose you are buying a machinery 20 years before. Accounting talks about cost which you incur at that time, and it records and brings in balance sheet that particular cost. Accounting is limited to certain monetary transactions only. It doesn't consider non-monetary areas. Accounting statements do not always present comparable data, and that is the biggest limitations, because accounting understands its own purpose. It doesn't cater to others. The cost concept is very important concept of accounting, because cost is emerged at every stage of business transactions. Whenever there are price changes are not reflected in accounting, because price is an external situation. Money value is bound to change, often from time to time, which accounting doesn't consider. Accounting statements do not show the importance of inflation, and that is the biggest limitation. The accounting statements do not reflect this income or in the net asset values, and that is also one of the limitations of accounting. Friends, now let us understand accounting principles and conventions. You must be knowing, as a doctor, he is required to follow certain principles. As a lawyer, he is also required to follow certain ethics and principles. Similarly, accountant also is required to follow certain basic guidelines and principles. What are those? The first one, money measurement. As I said before, all transactions are converted in terms of money and money's worth, because accounting understands only money. Non-monetary transactions are not reflected in accounting. Second concept is entity. It is called business entity. Accounting understands Mr. X and his business XYZ and company. For accounting, there are two different distinct persons. They are not the same, because Mr. X can purchase, he can sell to XYZ and company, though XYZ and Mr. X one and the same person. Accounting understands going concern. What exactly it means? Going concern means the business is going to continue for a longer period of time, because business is set up to do some business, to earn some profits. So it has to continue for a longer period of time. Accounting understands cost concept, because cost is emerged at every stage. So cost has to be understood at every stage of business transactions. The accounting understands dual aspect. As we know, every debit has to have corresponding credit, every credit has to have corresponding debit. So debit has to be equal to credit, because accounting records transactions in both the areas. That is why assets and liabilities always have to match. Accounting period concept takes into consideration the period for which accounting is prepared. Normally, we prepare accounting for 12 months. Even 18 months also is allowed. So whatever period we consider, that period accounting has to prepare the balance sheet and profit and loss account. Why we follow this accounting period? Because you have to know at every stage, are we making profits or we are incurring losses? That is why accounting period is very important. Next concept is conservatism. Accountant is taught to be very conservative in his approach. It means he should provide for all known liabilities. He should provide for all incomes, because you are going to incur that expenditure, you are going to expect that income, that has to match with each other, and conservatism is very much required. Accounting understands realization concept. Money is realized only when you receive the cash. If you receive a check, it will not be called as realized unless you get a credit in your bank account. Further conventions are matching principles. What exactly it means? It means matching of the balance sheet and assets and liabilities, revenues and expenditure. Unless you got a money, you got a source of income, you cannot spend that money. That is why accounting considers the revenue and expenditure matching. It also considers consistency. What exactly consistency means? Consistency implies whatever accounting principles you follow, for example, stock valuation, depreciation, you must consistently follow the same principles in next accounting year and further next accounting year, because otherwise you are going to show different profit and loss account which is not accuracy, and materiality concept, which considers all significant transactions which are going to affect the future business of the company should be reflected in accounting. And next is objectivity. All objective features of the business should come in accounting, because whether it is 1 rupee or 1,000 rupees is material for the business. They have to know how the money is spent, who has spent the money, why the money is spent, so it has to be objective in its nature. Now let us understand the difference between financial accounting and management accounting. The very purpose of financial accounting is to record all business transactions, while management accounting considers the reporting. After the balance sheet is ready, reporting is done to the management. What kinds of reports are prepared under financial accounting? In financial accounting, we prepare sales register, purchase register, journal, ledger, trial balance, final accounts. While in case of management accounting, we prepare MIS, cash flow, fund flow, ratio analysis, budgeting. So all these are reporting for management. Now what are the standards for presentation? In case of financial accounts, we prepare the financial accounts in terms of profit and loss account, trading account, profit and loss appropriation account, and balance sheet. While in case of the management accounting, we prepare cash flow, fund flow, budgeting, and ratio analysis. Now let us try to understand time period covered under financial accounting. The financial accounting considers normally 12 months period, but management accounting, there is no time period. Every now and then, every day, you may have to report to the management. So reporting is one of the very important function of management accounting, and financial accounts supports for that. Now next is users of information. Who are the users? All stakeholders. For financial accounts, it is the accountant, manager, director, promoter, all they are users of information. While in case of management accounting, it is the outside stakeholders such as suppliers, customers, banks, institutions, government. These are all stakeholders. Even auditor is a stakeholder. Now let us understand what is the role of accounting. The most important role of accounting is it gives quantitative information about financial data, about usefulness, and about the decisions to be taken. So that is why accounting plays a very important role in the business of the company. Thank you so much.